Hey folks, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, June 11, 2015, and this is a daily chart of the the ES contract, and we've rolled into September as of today. So what that means is I had to recalculate all the numbers, and I'm still working on that. So what I've got in here are numbers that I believe are good, but I'm going to fine-tune them a little bit, and they may change by a point or so, not much, but I'm going to do them another couple of times just to make sure that they're as accurate as I can make them. But for now, they're good, and let's just go over them real quick. So we have the 2115 is still valid on the upside according to my calculation. The next level down is 210850, and that's where we are now. In other words, we made a run for that today and came up short. Now that could be deemed in two ways. Either we came up short and that's bearish for the market because it is a target on the upside, and not a short but a target. There's a difference, right? We know that. So a target is something the market will run to. A short is something that the market will run from. Okay, so what happens is it can be either weakness or it's just a typical pause day in the market after a huge up day yesterday, and you know, we had light volume. There wasn't a lot of activity. There's not a lot of stuff moving today. Some stuff, but not a lot. So it was basically a mundane day. And really the third issue is when we roll from one contract to another in the E-mini. So we rolled from, July to September, or June to September. What happens is there's a lot of jockeying around, and the volume gets kind of strange for a day or two. Can't really explain it in its entirety, but the point I'm making is I'm not really holding too much stock in the fact that we didn't get to 210850 today. Okay. We can take a run for it tomorrow. That's certainly possible. And now let's talk about if we do and if we fail at that level. Okay. And by the way, we can certainly go to higher numbers. We can go to 2112. We can go to 2115. But what happens is I believe that we have some more cycles converging between, let's just say, tomorrow and Tuesday, that could put a bearish tone in the market. So what I'm really saying, and I'm not suggesting that the market's going to collapse by any means. All I'm suggesting is that lines up with the fact that if this was an up move in preparation for a larger up move, right? Let's say this was the next bottom, just like this was a bottom and this was a bottom over here or over here, all these. If this was another one of those, which it likely is, okay, then also the likely scenario is that we're going to come down and test one of these three levels here, okay? And the reason why this one's green is not because it's an all-out buy. Don't misunderstand that. I apologize. I probably should have made it another color. I just realized that now. But the reason I did is because I just wanted the three levels not to kind of meld together and just have them stand out. So for no other reason than it's just the one in the middle. But by the way, it's the same 2085 from before that was extremely important. Now it's 2184 through my calculations, also extremely important. And here's the thing, okay? If the market corrects, which is a normal activity on such an up move, let's say we were going to make a larger up move, right? So let's just talk about this one more time, right? We have the, let's say we were going to make an ABC correction. So I'm going to just pick this one out here and say, where's an ABC correction? Can we find one? ABC, or not an ABC correction, just an ABC move. How about from this low, how about an ABC? I mean, you just see them all over. You have to look for it. And once you see what I'm talking about, you just see them all the time. So as long as we make a higher low and then make a higher high, that's, in my book, an ABC type of move, right? So ABC, AB, we'll see, or no, this would be A, B, we'll see. And so what I'm looking for is the market over the next few days maybe to come back and test 2089, 2084, and then hopefully find some support for the next leg higher. And we'll have to take that one day at a time. But that's where we are in the market. Other than that, nothing else happened today. So I know I'm kind of reiterating a lot of the same things, but that's okay. I guess, what do they say? Repetition is the, what is repetition? Is it the mother of all learning? I think so. So that's where we are. Let's go on to, I didn't talk about the spider, and I apologize for those of you that like the spider. It's the same routine. I don't have to update any numbers here or anything like that, but I'm going to, because what I want to do is I want to show you where the correction would come to, and we can use the 209.74 as a guide, but actually what I'm going to do is, because I have some updated numbers here on another chart, and why don't I just do it with you real time. Let's go to, let's see, here's what we've got. We're going to change this one to, sorry about this, folks. I probably shouldn't do this and make you wait, and I apologize. I'm gonna just do one more, and then that's it. And here's what we're gonna do. I'm gonna make this one. Okay. No. I'm sorry. All right, so what I did was I paused the video, I put the lines in, I apologize for making you wait before. That wasn't right. So here's what we've got, and they're all bunched together, but there's a reason for that, is because what I'm doing is I'm calculating where the likely stopping points are for any correction that would occur, just like I did in the E-mini contract. So 210.98, 210.40, 209.98 is probably the best level, and then 209.37, 208 beyond that, and back down to 204.50, which I don't think we're going there. But on the upside, it's really the same routine. In this area here is going to be the 212, and that's going to be good enough for now. If we get above 212, we're going to head to double top, and it's pretty much that simple. All right, let's move on to gold. Sorry to keep you waiting, folks. I apologize. This is the August contract, and we are in September, June, no, August. No, August is correct. Okay. All right. So gold did nothing today. It was down. It recovered a little bit. But this is nothing more than the same routine we just talked about in the S&P. This is basically, it had an up move. It had the move we were expecting. And now we're correcting, and if in fact we can put in some kind of a bullish pattern here, like go sideways for maybe 4 or 5 days, we could maybe be setting up for the next leg higher. If we start to come down, we're going to come down to double bottom and then this 1155. And it's pretty much that simple, but there's no setup here for a trade. I'm just kind of reiterating what's going on and what we're looking for. We're looking for the setup, but it's not giving us one yet. So rather than belabor that point, we'll just move on. Let's talk about GDX. I know some folks like GDX. So we were talking about the trade in GDX, and you're basically, if you're in that trade, you probably either should be out or going to be out or thinking about getting out, because it's just not holding this trend line. It held it for 3 or 4 days, and that's okay. And by the way, here's another little lesson for you. When I put a trend line in, or I give you a price level, and it's on a daily chart, okay, that line would normally hold for a few days. If it's not going to hold, it'll hover for a few days, or it'll just bounce off of it. But if we hold, if we consolidate for a few days and we don't bounce, the chances are it's not going to hold and it goes lower. If I gave you a number on a weekly chart, it's a little different. It's a longer term type of bottom, and we'll get to that in a minute when we talk about the bonds. So GDX, there's really nothing doing. I wouldn't necessarily be long GDX. That's you're almost trying to catch the bottom, not knowing where it is, right? I know some folks took the trade off this line up, for a bounce, and that's fine, and you make some money, but you got to, if it's just for a short-term day swing trade, 2-day trade, intraday scalp trade, you got to take the money and run. You can't be greedy and wait for more price because it might not get there. And that's why I teach, putting a break-even stop, trailing a stop, taking some profit, all of those things, some combination thereof. All right, let's go on to oil. Oil sold off today. Remember that 21.75 I put in last night. As long as we're beneath the 21.75, there's a likelihood that we're going to go down, most likely to the bottom of this channel again. And I actually hope we do, because I think that may present a buying opportunity, but we have to see what it looks like when it gets there. But we'll see how it goes. So as long as we're below 21.75, 61.75, it's a should be downward pressure in the price of crude oil. So if you're short crude oil, the problem is your stop has to be all the way up at 61.75. And if you play something like USO, it's pretty simple. You just use yesterday's high, a close above yesterday's high, which was 20.80. And that may be a better deal for most because the oil contract is leveraged, and that's a lot farther away than the USO is on a comparing product to product. So all right, so that's oil. So you get the picture there. There's really nothing else to say about it. Natural gas, might as well talk about that since that's copper. Pardon me. Where did natural gas go? I had trouble finding it last night too. Some reason it moved on my list. Okay. So natural gas put in your 3 days up, and now you had a pullback day today. This was an engulfing candle into the 20-period moving average on the daily. So you found some support, but chances are there's more downside in gas. And really what's telling you that is this engulfing candle. This is telling you that the market wants to go lower. If in fact we tested the 20 and we closed above yesterday's low, that would tell you you're probably going to put in a few sideways days, or maybe that was it. But this tells me that it wants to go lower, so I would be looking at a minimum into the 50-period moving average if anybody's playing natural gas. Bond market. Let's go to the TLT. And this was fun, right? I mean, we hit the low, 115.43. Well, the low was 115.26. In my book, that's a direct hit when we put the line in. We were way up here. Especially, it was really derived on a weekly chart. So that was a huge bounce. It was a nice 2% up day in the TLT. Was that 2%? Yeah, it was a little over 2%. And I don't really need this. I mean, you know what? I'm going to leave that in. And the reason is you didn't get there today, but you would normally find resistance. And this is just for another educational moment. You would find resistance at the low of this area here. So the underside of here, you would find low. So what happens is support now becomes resistance, okay? And that's just the way it works. So if you can get above this level, you'll go right into the 20-period moving average, but you'll normally maybe put in another big up day and maybe even another one after that, but you're going to need to consolidate for a while. And once we do see what happens in the consolidation, anybody that wishes to get in that trade can. Those that are in the trade, and I know that a number of you are, just have a stop in the money right now, not break even, have a stop in the money and then trail it forward. In fact, you can put a stop tomorrow. I would put a stop somewhere in the 116.50, 116.75 area. That would be safe. This way you guarantee yourself a profit. I never, ever, ever like to see anybody turn a winning trade or what should be a winning trade into a loser because A, they got greedy, B, weren't paying attention, C, just neglected to put a stop in. All those things, they're just careless errors. They're like our kids made in school, or our kids make in school, careless errors. And sometimes we get frustrated when that happens because they're really mental errors. In baseball, we call those mental errors. We don't care if a kid boots a baseball. That's part of the game. A kid strikes out. It's part of the game. But when you make a mistake that you shouldn't have made because you weren't thinking correctly, that's the error we want to avoid. Okay, that's just a little wisdom, I guess, for you. So we talked about the S&P. We talked about the gold market. We talked about oil. We talked about bonds. How about the dollar? The dollar was a little bit stronger today, and that would make sense because we came into a retrace off the fib lines from high to low, from low to high, and we came into a, we came into a 7.5 retrace off that level, and we bounced. So that's normal behavior. I think, in fact, I'm going to take this out because we don't need it anymore. I just think that the dollar is not finished going lower. I'm not thinking that this is an ABC. I'm thinking that we're going to get just some kind of a paltry rally or recovery or correction, and then I think there's lower prices, and I think we do take out these lows. And if we can come into this level here, in fact, here's what I'm going to do. I'm going to do the same thing I did with the bond market. Okay? Watch this. All right, this is even going to be different than I've just been doing. I'm going to do this, and the green is for a reason. Okay? And I'm going to make it real heavy. All right, that's your number. All right, that's your number. If the dollar comes into that number, you can buy it with 3 hands. Okay, I think that's it. There's really not much movement in stocks. In fact, after the market closed today, I did see some action in Twitter. Why? Because their CEO is stepping down, Dick Costolo. Don't really make anything out of that other than their CEO is stepping down, and the market, I guess, likes the idea or was looking for a reason. Here's the after hours chart, all the way up over $40. We'll see what happens tomorrow. You may see some short covering tomorrow, or you may see it crap out and nobody would really care. We'll see. I think Twitter's a cool company. I think they do good stuff, and I think in terms of the future, it's such a mainstream usability service that I think they will be successful. I just think they're trying to find their footing, and that's normal, right? I mean, Facebook went through that for a while when it came public, and so the market will straighten these guys out and send them in the right direction, and the market didn't like Dick Costolo, so the market told them, beat it. I guess that's what happened. I feel bad for the guy. I think he's a smart guy. I think he was doing a good job. I think the market just sent the stock down, not anything of his volition. They'll figure it out. Okay, so any other stocks we want to talk about on the list? We talked about them yesterday. I think I've covered most of them. There's a couple of problem child. Stratasys is giving us a hard time. I'm going to run out of patience with that pretty soon. We'll give it another. We'll give it through this next market rally should it happen, and then we're going to leave that party one way or the other, I'm sure. There's really nothing else going on. You know what? I will talk about Bank of America because we're going to exit this, and I'll show you where we're going to exit. Not going to exit yet, but here's what we're going to do. So let's go to the weekly chart, okay? And what I'm looking for is $18. And depending on how it treats $18 up here at this double top, I'm going to begin to raise my stop, and I'm going to have a real tight stop when we get towards 18. And if we consolidate just under 18, I'm probably going to leave it be looking for higher prices. If we fail at 18, I'm going to get stopped out. And that's the way I'm going to play Bank of America. So you should take note of that if you're in Bank of America. Other than that, folks, I'm going to leave it there tonight. Thanks for tuning in. I'm David Frost, My Strategic Forecast. This was another episode of Common Sense Market Analysis.